Hello guys, welcome back. So as always, make sure you subscribe to the channel first. Also like the video at the end. Make sure you stick around for that at the end. But I want to get into what's coming up now. It's the US job reports. I'm not going to wait around for too long. I do want to quickly jump in. We've got 4 minutes until this news comes out. It's going to be very, very big. Let's have a quick look overview of the crypto market for you all. So as we see, the pump has kind of continued, which is actually a very, very good sign. It's a sign of a little bit of a recovery. I do just want to bring a little bit of potentially bad news. And that is because we are near the pi cycle bottom. So we've seen this indicator a couple of times before, and this has usually indicated the change of, well, maybe not the change, but the beginning of the end of the bear market, if that makes sense. So it's the beginning of good news, but it's the beginning of the end of the bad news. So it's good news. So here we go. Pi cycle bottom, as you see here, myself and AJ, we've covered this extensively. And so once we get this pi cycle bottom, we usually have a little bit more downside. As you see, bomb, it's here. So then we see a little bit more downside, and then it's an eventual recovery. Again, we see this here, pi cycle bottom. We have this, kind of crossover, should we say. That is the red comes below the green, and then we have an eventual bottom out, and then movement to the upside, and then, the next market is a go, which is great. And here we are again. And guys, I'm on a logarithmic scale here. So this is why, the price looks a bit weird, but we're close to this, very, very close. That looks nice. Looks good to me. I think we might be able to get there. We might be able to get there. If we do, then, bloody right. That's good. Because then hopefully we're going to see a little bit of a movement to the upside. But this is on a monthly timescale, guys. It's happened before, but when it's happened before, it's taken a long time. Each candle is a whole month. So that's 5 months, that's a bit too long. I'm not really sure I want to, fancy waiting that long. But I do think, guys, I've always said this. I think we're going to have, I think we're going to have a bit of a pump around about that October, November, and kind of really begin to see a rally in the early stage of next year, late stage of this year. Now I'm just going to bring this in. Let's drop this down. We're going to let's go for a four hourly. See what's going on. I'll take it off log for everybody so you don't go insane and be like, what's going on? So here we are. Let's bring this down. So we have kind of hit a little bit of an area of resistance, as you see here. Previous support down at this level, this 22. Maybe it's just a psychological number. I'm not entirely sure. But, we've seen a bit of a pump. I do expect to see a little bit of a pull to the downside. But the most important thing, and the thing that everybody's looking out for, is this. Now, guys, I would like to be going live and watching, showing you all of this. But I can't, since, YouTube are not very fancy with it. They don't appreciate, because I pay for it. They're not going to allow me to show it. Quick bit of news though, guys, just before we jump into it, is that analysts are saying that this may be a bit of a fake out as opposed to a proper move to the upside. So I would potentially slow down. I don't think that this is the end of what we're going to see. Like I said, pi cycle bottom previously does indicate we might see a little bit more downside. We have had a great pump, and that's great. But, I wouldn't immediately jump on your longs and then think, hey, we're going to the moon. We're going to want to see some confirmation. Yes, we've had a bit of a hit off of this level of support, that we're seeing around here, that resistance. But I think we're going to see some movement to the downside. Non-farm payrolls are in. So so the expectation, revised was 384. Basically, what this is saying is that there were 372 new jobs added to the economy. That means the economy is stronger than we think. And it also means that unemployment is that's pretty good. That's going to give the market a little bit of confidence. But essentially, non-farm payrolls, they come in higher. The economy is stronger than expected, which is bad for the markets. Let's jump in. I'm going to get on, let me just jump on. I don't know. Let's go on the minute. Never go onto the minute. I never go into the minute. But immediately, boom, we see a massive wick to the downside. And now we're seeing downward pressure. And the reason for this, guys, is because, why does it look so weird? Is this what the minute looks like? What is that? I feel like I might be doing something wrong here. But yeah, so essentially, we see a bit of a wick to the downside as the news is released. You can see that here. So this is the report has just come in, guys. 372 jobs added to the economy, which, to be honest, well, I say the economy, I'm an English guy sitting in bloody the United Arab Emirates. So, I know when I say the economy or I say, this is what's happened for us, I'm talking about the market. And the market is based around the biggest financial market in the world, which is US. So I just kind of live and breathe the US. We have a pretty, okay, it's not a violent reaction to it, but we are having a bit of a movement to the downside. It's because the economy is stronger than expected. Strong economy sounds good, but it's not, because what does that mean? It means that when we come to the Fed, let me go to investing.com, bring up my central bank Fed rate monitor. It means that what we're going to have, we're actually not going to have anything. I think we'll just, sit and look at my basic attention token wallet. Go on, Brave. Well, okay, let's come back to that because that's clearly not worked. But what it means is that we're going to have a much more severe reaction from the Fed. So what we're going to see is more pressure on the economy. We're going to have higher rate hikes, and we can actually see it now. It's loaded. So I'm going to update you on this in the coming days, but the percentage chance of seeing a higher interest rate hike, it's going to happen 2 weeks, well, almost 3 weeks. So almost 3 weeks. The bottom line, guys, and you see this here, 3.6. Currently, S&P futures are down. The market is down. NASDAQ is a risk on asset. Bitcoin is a risk on asset. It's falling. The reason why it's falling, like I've said before, guys, bonds are also falling. And this is because we're going to see the Fed do a lot more, take a lot more action to tighten the economy, because inflation needs to be around about 3.9 is the predicted by the end of this year. If we keep having positive jobs reports, we're not going to see that. So the Fed are going to be like, all right, well, what are we going to do? Well, let's tighten the economy. Let's get some interest rate hikes. Let's do, all of this very bad stuff, which is not good for us, not good, for Bitcoin or the investors. But anyway, so that's the overall kind of view, guys. You have to take this into account. I know I mentioned it earlier on in the week. Been a little bit, as you can hear, sick lately. But yes, we're seeing a push to the downside. This is why I said, look, it's great, but everyone don't get too excited. On Twitter, everyone's going absolutely mad. Oh, we're going to see so much goodness. I don't know. Not sure yet. I'm not sure. I got a couple of comments. I was going to just wrap this up here. Good morning. Please load it. Let's see what's happening. Thanks. Yeah. I know. I did try. I really did try. But yeah, look, and now we're seeing, because what's going to happen is people in anticipation of this will have had, okay, well, look, if we have a positive jobs report, I'm going to have an order, let's say, I say positive for Bitcoin, which is like a bad jobs report. So if there was a bad jobs report, people would say, okay, well, that means Bitcoin's going to pump, or risk on assets are going to pump. If we have it's a good jobs report in terms of actual job numbers being higher, but it's bad for us in Bitcoin and the investing world. So then people will begin to have orders triggered, and they'll say, okay, look, probably, if I break this level of support, then, let's go down. Or if I break past this, previous wick or whatever, so we might begin to see some orders being filled, or, people being liquidated in or out of positions. So we're going to see a lot of this volatility for the rest of the day. Bear in mind, the US markets do not open for another hour. So keep that in mind. That was the worst. I'm very sorry. Keep that in mind. And we are seeing a massive amount of volatility. So there you go, guys. That was everything for today. Hopefully what are considered risk on assets. Devon, I will answer your question. Let me just remove. Voila. What are risk on assets? So risk on assets are typically things that you buy them in anticipation of it's growing in value. So a tech stock is good because, you don't buy a tech stock because they don't give you a dividend, you buy it because you hope that they're going to get absolutely massive. And therefore, it's risky because if it doesn't get absolutely massive, then you've lost your money. But if they do, you make loads of money. It's like betting on Amazon in the 2002, for example. Bitcoin is the same. It's considered risk on. So all of the cryptocurrency market is a risk on asset. Tech stocks are considered risk on assets. And that's kind of all, to be fair. You have some commodities which are considered like risky, because they depend on, or, a company mining, let's say gold, if they hit the jackpot, they win really big. But it's a risk. So it's a high risk, high reward. That's usually tech stocks. What are not considered risky? So a non-risky asset is something like something we use every day, but not tech, like a telephone provider, maybe, or energy. That's not a risky asset. I mean, it kind of is, but everyone's going to need oil for pretty much the rest of time, until we all run out. But for the moment, we know there's a guaranteed supply. There's always going to be people who need oil. There's always going to be people who need toilet roll or need toothbrushes. So people like P&G, for example, Procter and Gamble, that's not a risky asset because you know that they have a steady stream of income, or even Coca-Cola, for example, been around for ages, steady stream of income, pay a strong dividend, and they don't really grow that much, but they're very stable. They're literally just stable. So typically what people say is you should have an overall portfolio, if you're investing in like just say traditional markets as well as also crypto. You would allocate a small portion of this, let's say 20%, to a risky asset, and then you would have, I don't know, let's say 30% to high dividend yielding companies. And then you would say, okay, I want then the rest, I have like 10% in energy, I'll have 10% in consumer goods, which is like Procter and Gamble's toothbrush, water, things that you use every day. Even if there's a massive recession, you're still going to be buying baby food. You're never just not going to stop. You're not just going to stop feeding your baby. But yeah, so that's how you kind of make up a portfolio, is diversifying throughout different things. But yeah, usually the risky assets are those that you hope to invest when they're small and that they will explode in the future. So yeah, there you go. Or probably drop the link so we watch it ourselves, please. Thanks. I know this is in regards to Bloomberg. What I would recommend is just go onto YouTube, hit them up there. But this is, you can actually watch this. You're allowed to watch, I think, like half an hour. It's just bloomberg.com/live. You're allowed to watch like half an hour a day, I think it is. But I've paid for the full one. So, I can obviously watch it all day, which is why I can't, stream it all day. But anyway, there you go. Hope you have a good day, guys. Watch out. Obviously, at the moment, the key thing is we're seeing a bit of a push to the downside in Bitcoin. Same with the Nasdaq. I think we're going to continue to see this. Once the markets open, I think we are going to see traditional traders, the hedge fund guys who haven't turned up to work yet because the market doesn't open till 9:30. They will, well, today might be an exception because, it's a big day in terms of news, but market doesn't open till 9:30. They can't actually fulfill their orders until the market is open. So that's where we're going to see a lot of volatility. Watch out for that, number one. But just to recap, guys, look, we're seeing non-farm payroll. Lots of people have jobs, which is very good. It makes me feel good, but also it's really bad for our crypto investments because they're going to go down. But I kind of thought that was the case. We had this article to kind of highlight that. Also, as I mentioned previously, bringing us back onto the monthly, we have this pi cycle, and we are, I think, we are about to see this is just going to be too long, guys. I think we're about to see this, where the red crosses over with the green, and every time it's happened previously, boom, crossover, uptick. Red crossover, uptick. So there we go. Anyway, guys, that's everything. Make sure that you always use stop loss. Don't, that's just number one. Don't ever trade without a stop loss. It's that. Stop it. Get some help. I wish I could add that in. Anyway, have a good day, guys. All the best. Trade safe, and I will see you tomorrow.